It's getting easier and less expensive to start up a tech company, but with more companies getting out of the gate, good advice is even more important than ever. Tech companies don't just want to start, they want to stay around, and they want to be best in breed. The new environment is making venture capital firms and angel investors clarify their roles in the marketplace. Beim is with us now. He is a general partner with Matrix Partners. It is a well-known VC firm that invested early in companies such as Apple, Veritas, and the Gilt Group. Nick, thanks so much for joining us this morning. How does the role of VC differ from even a super angel investor?
Both super angels and venture firms play critical roles in the startup ecosystem, but the roles are different because the investment models are different. The angel or super angel investment model is very wide and shallow. They invest a small amount of money early on in lots of different companies, and as a result, they can't provide the level of support that venture firms typically can. Venture investors have an investment model that's deep and narrow. We always take board seats, we always provide follow-on financing, and we get very involved in the operations, financing, and strategy of the companies that we support. The two models have some degree of competitive overlap, but there's more complementarity.
And it seems like a longer-term play as far as the venture capitalists' longer-term involvement. Do you feel like venture capitalists overall, though, have too much money to spend? I know that seems like a nice problem, but for some VC firms, it seems like it actually is a problem.
Yes, in one sense, but no in another sense. Yes, in the sense that I think venture capital is overfunded as an asset class and has been since the tidal wave of money came in 2000. But no in the sense that I think as a result of the decreased initial capital requirements of internet companies in particular, venture firms are not really at a disadvantage. And I see that for two reasons. One, venture firms make seed investments of their own and always have. And two, you can't build a great company, a big company, a best-in-breed company on angel investments alone. Angel is typically a bridge to venture financing.
So is your goal, though, always to bring a company public, even though the market has become so volatile?
Not always. Many best-of-breed companies are acquired early in their life cycles, but the biggest ones that are best-of-breed that get to be hundreds of millions in revenue generally do go public.
I want to ask you about a headline, some reporting that we've done here at Bloomberg about Groupon. This is the daily coupon website. I mean, they have 20 million followers. And it seems as if they're seeking funding that would value the company at about $3 billion. I know you and I have spoken in the past about this power of social commerce, but does that seem like a lot of money, a high valuation for Groupon, or does it sound about right?
Well, it all depends on their numbers. I've heard similar rumors, and I wouldn't be surprised if Groupon raised a large round of financing or might possibly be acquired in the upcoming months.
But it does certainly speak to what we have spoken about, right? The strength of this social commerce. I mean, Zynga, Gilt, you've been involved with Gilt, Buy with me as well. This is all showing a new trend, right?
Very much so. Consider the following data point. What appear to be the three fastest growing companies in the history of the internet. And by fastest, I mean not in terms of traffic or in terms of users, but in terms of actual revenue, were all founded in the last 4 years. Those three companies are Gilt, Groupon, and Zynga. And they're all growing faster than the internet giants of the late 1990s, Google, eBay, Amazon, and Yahoo. It's a very exciting trend.
So what's the next big thing?
We are watching a number of megatrends that we think will produce disruptive opportunities. One megatrend that continues to be very significant is social. I think social is just beginning to disrupt traditional media and commerce models. Another megatrend is mobile. And there are a lot of ways mobile will be manifest, but probably one of the most interesting that we're tracking is payments. We've recently invested in a company called Zong that enables you to pay for things with your cell phone number. And it's in fact become the mobile payments platform for Facebook, which is very exciting.
And we know we've seen people in Asia at least be able to charge credit card, rather their rooms at a hotel and taxi rides just by putting their phone up to a monitor. So we'll see if that can be brought here to the U.S. Nick, thank you so much for the time. Nick Beim joining us there from Matrix Partners.